We are changing things up a little bit with the format as well this morning, because I am now going to be introducing someone to help me with my job today. It's someone that many of you will recognize because he was one of our best-rated speakers, actually, at the 2015 ICMIF conference. So sometimes, a bit like cooperative and mutual values, it is worth hanging on to some good stuff that's not necessarily completely new. So without further ado, I'd like to welcome back to the ICMIF conference Mike Pratula, who actually has had a bit of his own reinvention because he is no longer with his former organization and is now president of RMS. Mike, thank you very much for joining us today. Would everyone please welcome Mike?
Thank you. Thank you, Faye. It was just yesterday, it seems like it was just yesterday that we were all in Minneapolis together, so it's another great city, though I think London may not like the comparison to Minneapolis as two cities on the same plane. I'm delighted to be back here again, this time as president of RMS, and I'm going to be your guide through these sessions today. And I have the privilege of providing a little synthesis, ongoing synthesis, as we go through today's sessions, as well as drawing together the key lessons and themes at the end of the day, the final session. I've spent, I think as most of you know, 30 years advising mutual insurers on technology and on innovation. And while I now serve as president of RMS, I'm now thrust right into the middle of these topics, RMS being an analytics firm, a software firm, data, services. So I kind of, after advising, kind of said, let me jump in whole hog into this world of technology and innovation. You heard a number of the panelists yesterday say that today's topics really are ground zero for determining our success as mutuals. And I couldn't agree more. It was great to have those plugs yesterday. And I really do think these are the most important topics of the week, what we're going to cover today. Let me briefly introduce the day by asking you to keep 3 points in mind. Firstly, we are all technologists now. You can't be a leader, a senior executive in your organizations without getting immersed in technology, without being familiar with what things like the cloud means and doesn't mean, to know what software packages are or aren't available, and whether or not you've got an appropriate data analytics strategy. These are all topics that we as senior leaders in the industry and senior leaders in mutuals need to be familiar with. So we're all technologists now. You can't hide from this topic. Secondly, go out on a limb and say, as mutuals, in this area, we are not executing fast enough. We are not executing the way that we will need to maintain our relevance. So this is a little bit, as you think about what we hear today, a call to action around executing faster in this area. How will you take the insights from today back to your organizations to help execute faster? Thirdly, and most importantly, as mutuals, we are in a privileged position in terms of the partnership, the unique partnership that we have with our policyholders to develop insights, to work with these policyholders to develop insights to allow us to innovate in ways that cement that partnership. There are very, very, very few institutions, non-mutual institutions, that have the depth of connection to the customers that we've got. And that's an advantage when you start talking about innovation on the technology front. So without further ado, the 5 modules carefully crafted for today. There's a little bit of a a method to what was put together in today's program, and it's as follows. The first is going to be a broad overview of how we can think about redesigning the entire business system in insurance. So we're going to start at the highest level. The second session is going to look at the core of what we do, which is to underwrite and price risk. So the second session will be focused on the core of underwriting and pricing and how technology can be used for us to make better judgments and to better steward our risk-based capital. The third session, when we come back after lunch, we'll be looking at how technology can be used better and differently to market to and interact and engage with our customers. Fourth session will be how do we organize ourselves, how do we design our organizations to promote more innovation, to promote a better use of technology. And then the fifth session, I'll close with a little bit of wrap up on what we've heard over the course of the day today. So for our first panel, to my immediate left is Bill McKinney, who's going to chair this particular panel. Bill is an old colleague of mine from my former firm and is now Vice President of Strategy at Thrivent. Immediately to his left, Kumar Shalabha, the Executive Director from Uplift Mutuals in India. And to his left, Joe Dijkstra, the Innovation Strategist. We do want to find out what Innovation Strategist means, Joe, before we're through here, from ICMIF in the Netherlands. Ken Ning, who's the CEO of NTUC in Singapore. And finally, on the far left, and we're going to hear more from her, Andrea Eichhorn, global industry leader from IBM, and you will have the big picture for us, I'm sure, today. So without further ado, over to you, Bill.
Thank you. Thanks, Mike. So 2 days ago, Andrew Gill challenged us to do more and to do it faster when it comes to technology and how we engage with our customers and our members, and I'm pleased to get to lead this conversation today. Hopefully we're going to extend that challenge a little bit, but more importantly, we're going to dig a little bit deeper into what some members of our community have done, why they've done it, and how they've done it. As Mike mentioned, my day job is I do strategy and long-term development at Thrivent, and my part-time job is to lead the intelligence committee for ICMIF, and it's a group of 20-plus committed leaders who get together twice a year and try to advance the thinking for this organization. And we've spent a lot of time on technology, on innovation, and how it applies to marketing, distribution, products, and internally in terms of how our employees work. So we're going to dig into many of those issues today. My panelists are all experts in technology in some way, shape, or form. I think they would all meet Mike's description of being technologists. So without further ado, I'm going to have them introduce themselves excuse me, and get us started by telling us why technology plays a critical role in the work that they're doing at their company. So maybe Kumar to start.
Thank you, Bill. We have to serve a clientele that earns $2 to $6 a day, and if we don't invest in technology, we can't get mutual solutions to them. As simple as that.
It's quite simple. To come back to Mike, strategic innovation is a small department within ICMIF, and we use 3 horizons in ICMIF, and strategic innovation are all the new disruptive business models, but more in the far future. And yeah, all those are technology enabled, so we cannot go around those technologies for those innovations.
Great. Ken?
Yeah, so NTUC Income operates out of Singapore, and I think as many of you might know, Singapore is a city-state where broadband penetration is very high and cell phone penetration is super high. And I think if there's a place that digital disruption could happen, I think it would be Singapore. And in fact, it is happening. Earlier this year, we have Amazon starting up in Singapore in the grocery market. And another local startup grocery business, online business, was bought by Alibaba. So what we have is this digital turf war fought by two big global online giants and happening right in Singapore. So I think technology and potential disruption is definitely top of mind for my organization and in Singapore.
Great. Andrea?
Hi, I'm Andrea Eichhorn. I work for IBM, and my day and night job is to help executives and their organizations understand how embracing technology can help drive efficiency and improvements in their organization. I'm very focused on cognitive, and I'm all about the consumer experience.
Thanks, everyone. So we've heard a little bit of the who is going to have the conversation today, and now Andrea is going to get us started by doing a brief presentation on kind of a flyby of emerging technologies and how technology is showing up in insurance industry today. So Andrea, I'll turn it over to you.
Thank you, Bill. So I have 20 brief minutes to walk through a lot of topics with you, so thank you for the time. I have the privilege of spending a lot of time with insurance companies, executives, and technologies, understanding how we can really embrace these things as they're coming up and adjust them and let them go as they start to die down and be replaced with new technologies. And insurance, that's a real challenge because we're not always the fastest moving industry, so I will see if I can pick up the pace with us. The four themes that I'm going to cover are what are some of the things that are impacting insurance, in particular around digital disruption and things that we need to be thinking about. Many of them have already been covered, but I want to summarize them. The second one are some of the emerging technologies, and I'll focus on four that I think are particularly important, as well as a unifying theme. And then I want to share with you some actual case studies of where we are around adoption in these technologies. And then finally, just provide some framework for you to be thinking about your success story as you either continue to evolve your transformations or start to engage in one yourselves. This is a picture that depicts, I think, what the pressures are on the insurance industry. So if you think of yourself in the center of this diagram, really focusing on what are the new business models, what are the new products and services that you need to provide to your members and to your customers, and at the same time be reworking your cost structures to be able to afford investments in new technology, all the while you have regulatory and political and environmental issues that we've talked about this week on one side, and on the other side, really evolving expectations from consumers. And everybody talks about baby boomers and Gen X and Gen Y. I don't think it's that simple. I don't think we can categorize and bucket these people into these broad things. I think we need to use information to truly understand who we're servicing and help them meet their risk profiles and their risk expectations in a way that's relevant to them. So the power of one is becoming more and more close on the horizon to something that we can actually deliver. And all the while that this is happening, we are accumulating data as we have never before done. And we started talking about this several years ago around big data. But here are some statistics about the kinds of devices that we are acquiring and using in our lives each and every day that are creating more and more data. And this can only help us in insurance because we are the originators of using data to help us understand consumers and business. And so now we have to figure out how can we do this at the scale and pace that this data is being created. But we have a challenge. IBM does research periodically around the world around the insurance industry. And we ask consumers, how important is trust in insurance? And they tell us with about 70 to 90% certainty, super duper important, very important. But when we ask them, do you trust the insurance industry or do you trust your insurance carrier? That number falls to about 30%. So here we are, and we've been talking about this week as well, in an industry where we sell intangible products based on trust and being there when they need us most, and we really don't reflect that in our relationships with our insureds as a general population. Just this week, IBM came out with a new research paper, and it's called Data, Gold, or Kryptonite. For those of you that don't remember, kryptonite is the thing that kills Superman. It takes away all of his powers. And so when we're thinking about capturing all of this new information in this relationship where people don't trust us that much and may feel a little uncomfortable using that information with their carriers, how do we build that trust? And what this paper highlights are really kind of 3 areas that we need to work on. One is around really addressing issues around privacy, cyber risk, and using that data for consumer benefit. Research after research shows people will share data if they trust the way that you're going to use it, and that if you use it in a reasonable and mutually beneficial way. The second thing is around the benefits. Insurance, we lag in helping our customers understand the benefit of what we do for them. And so being able to use that information to understand where your customer is in their life cycle, and understanding what their concerns and priorities around risk mitigation are, can help you to better serve them and to describe those benefits to them in language that's relevant to them. And last but not least, we've been talking about commoditization of pricing in insurance for quite some time. And research shows that this is not always the primary driver in consumer choices. It is in many, but not always. And so we need to get out of our own way in this space and use the information to show value. And the ultimate goal, of course, is what we see on the far side here, which is that there's an acceptance of mutual value and an understanding. And we believe that that's driven by having conversations with our clients in different ways. And actually, we see some insurtechs, and I'm not going to go through a bunch of insurtechs, but these are 3 that I think are interesting in terms of using data in a way that enhances the relevance to their consumer group. So Metromile is a pay-by-the-mile insurance. Lots of people complain, hey, I don't drive my car except on the weekends. Why do I have to pay insurance 7 days a week? So this is a company that listened to the customers, is using data to create new products and services. ISH is an aggregator of information. So addressing that whole factor of trust and being able to put information together in new ways to be used in different ways and in a trusting way. And last but not least is Bought by Many, which I think is the most leading edge, which is really taking socially created data and building trust and saying, what do other people like me do in these circumstances? What do other people like me buy in terms of insurance when they buy a very expensive condominium in San Francisco, like I have done? That was one of my first questions to my insurers. What do I need to be worried about? And he did not say the San Andreas Fault, for whoever said that the other day. The other thing that we do a ton of research around is how insurance carriers are working with insurtechs. And we've built a maturity model around that. So we find that people that are or carriers that are just getting engaged with insurtechs are forming partnerships and starting to learn from one another. The ones that are a little more advanced are actually developing corporate venture companies, much like what Bill has done in his organization, and starting to make investments in them and see if they can leverage the ecosystem of those insurtechs with their own ecosystem. And the ones that we see as being the most mature are using insurtechs as accelerators for their own transformation journey and their own adoption of technology, and in some cases doing mergers and acquisitions. Recently, I was in Las Vegas at InsurTech 2017, and we had many, many interesting discussions about cultural differences and engagement and how you work together. But the most interesting conversation I heard was with the regulators talking to the insurtechs. I don't know how many of you are familiar with Zen Benefits or some of the other startups, but they've kind of flaunted the regulations. And the regulators gave advice, much like what we heard yesterday, which is work with us, help us learn what you're doing and what you're trying to do, and we will do our job. Because insurance is inherently discriminatory because of the way that we use modeling, the regulators indicated that it is their job to make sure that things are applied consistently and fairly. And I thought that was a very nice explanation of the intersection of the two. So that was my fly-through on that. And now I'm going to talk a little bit about emerging technologies. Here's a brief diagram of the technologies that we see really being investigated, explored, and experimented with across industries, and in insurance a little more slowly than other industries, but still being embraced. We're seeing minimum viable products, or MVPs, being built. We're seeing some POCs, and in some cases, we actually have implementations, and I'll share some of those with you. But I think with a common thread across all of these technologies, and some of them will die, some of them are meant to have very short shelf lives, and you should think about that as you're adopting them, learn from them, and figure out how they lead to the next technology. But the thing they all have in common is, how do we collect and use data at larger scale, at faster pace, and do it in a secure and meaningful manner? That is the common thread that I think underlies all of these technologies, and perhaps my colleagues will disagree with me later, but right now that's going to be the premise that I move forward with. So the first one I'm going to talk a little bit about is Watson, which is IBM's cognitive capabilities. Some people call it AI for artificial intelligence. We call it augmented intelligence. And I think the things that I would like you to think about, because I don't have time to do a deep dive on any of these, is this is very different from the way we have created systems in the past. Augmented technologies, or AI, are taught technologies. So very much like when you bring a new employee into your organization and you teach them about the way you do business and your culture and your values, you teach cognitive capabilities, or AI, how to work in the construct of your business. And these technologies learn from being used, and we use something we call supervised learning, much like you would use with a person. You wouldn't sit down a claims adjuster and say, here, go adjust these claims, just do what you think is right. We teach them, and we scale them up, and we teach them over time, and we give them more complicated problems to solve over time. That's the same thing with these cognitive technologies. So you need to teach them and make the investments in helping them understand how you want to run your business. The second thing I'm going to talk a little bit about is cybersecurity. With all of this digitization and movement to cloud and being able to scale and driving towards agility, people are very, very nervous about cybersecurity. And it's not helped when we have Yahoo, and we have Experian, and we have some retail giants tell us that they've suffered significant data breaches, and that it may impact the people that they are trying to serve. And it doesn't help when large cloud providers have huge data outages for several days, and when the companies that rely on them say, listen, I need to tell my regulators where my data was when this outage happened, and they can't. And so the things that executives are focused on right now in terms of cybersecurity are the three things listed in here. One is the intelligence gap. It's very hard to keep up on all the different kinds of breaches that are being perpetuated, intentionally or unintentionally, or somewhere in the middle. It's hard to do it quickly, to really be able to identify across massive data sets and massive systems and interactions where the breach may have occurred. And lastly, there's an accuracy gap. We have models that help us identify what could be a likely breach, but there's still a lot of false positives. And with the speed at which these things are happening, it's estimated that banks in the United States are breached multiple times every day. It's hard to keep up with all of that. And so people are moving towards different options to help with this concern. And one of the options and one of the technologies that I see really becoming much more prevalent is this whole platform economy. We saw Apple start us on the journey to platform economy by creating a place that people could build applications and put their applications together with others. And Apple provides the infrastructure and some of the security and some of the other capabilities. In the enterprise or the commercial space, IBM is one of those players. And we're building out a platform, and this isn't a commercial, it's more education. We're building out a platform so that companies like yourselves can start to build out these new digital platforms for themselves, build out your own ecosystem of partners, maybe even across this organization, to be able to share capabilities, to be able to share data, and to be able to share learnings. So that's my very quick journey through technology. Now I'm going to share just a few case studies with you to illustrate how we're starting to use these capabilities in our organizations. So this is the insurance value chain as we see it in a very simplified view. I'm not going to go through each of these, and I am providing these slides for your usage, so you don't need to memorize all of this. But the point here is that these emerging technologies are being used across the whole value chain. It's not just in, traditional places where we use a lot of data around underwriting or around claims, but it's everywhere from marketing to distribution to HR to IT. We're monitoring now our technology organizations and anticipating when there might be a failure or a problem so that we can mitigate it in advance. We're using it for disaster recovery. We're using it for hiring. We're using it for posting into financial ledgers. So these technologies are being used all across the insurance value chain. So I'm going to start where my favorite place is, which is customers. And so with customers, we're looking at new ways of interacting with customers. Research shows that customers in general feel like they don't know as much as they want to know about their financial interactions, and that includes banking and insurance and investments. And more so, they say that they feel stupid asking questions because they think that they should know these things. So being able to use cognitive technologies and bots in particular to help them navigate all of the information they need to know and help them along a journey, maybe to prepare to talk with an agent or to purchase something in a way that is relevant and interactive and conversational, helps them to get through that process more effectively. And that may be a bridge to then go talk to an agent, or it may be a bridge for a truly digital experience. But much like Lemonade, but think about it across the whole interaction chain, being able to do that, and not in a formulaic way where I'm filling in a form and I have to really think about what is the right answer for this box, but in a conversational way where then as the insurer, you can mine that information and learn more about that person so over time you can serve them more effectively. And the same thing for agents. Not all agents are created alike, so if you can provide them tools like that, where they can see, these kinds of customers generally buy these kinds of things or have these kinds of risks, and here are ways that have been proven to be effective in helping them, then you can work that to be more effective of an interaction as well. And I see I'm talking way too slowly. Okay. The next example is around underwriting. And I'm not going to do a deep dive here because Gundala in the next section is going to talk about an actual implementation around underwriting. But the concept here is the same. It's augmenting, it's guiding, and it's helping provide context around these interactions to make them more effective. Core systems are not going away. They will continue to be our systems of record, but how we interact with them can change significantly and be more meaningful and more human. Around claims, we're doing a ton of work around applications to file claims, to check status on claims, and to provide updates on claims. We're also doing applications to help claims adjusters to, again, work in a more natural way. And last but not least, I give an example from Japan, where our colleagues in life insurance have done a tremendous amount of work about reading medical reports for life insurance and accelerating payments and meeting regulatory requirements around those payments. The next thing I want to talk about briefly is Internet of Things. Internet of Things is everywhere now. Sensors are really cheap, and we can mine tons of data and create lots of data around them. Two places that I think are very interesting for this organization are around providing benefits to human beings in two scenarios. One is around aging in place, and we're doing this in Europe, and we're doing this in Asia, where the aging population is very big, and the younger population is too busy to really be watching them all the time. So using sensors to make sure people are getting up and going to the refrigerator and going to the bathroom and creating alerts for their loved ones to say, Andrea hasn't left her bedroom in 3 days. This is a concern. You might want to send someone there or go yourself. That's a great value add that a mutual insurance company can provide for their consumers. Same thing in the workplace is providing sensors on safety equipment and temperature and geopositioning to make sure that your employees are taking breaks, wearing their safety equipment, and staying hydrated, and minimizing claims and risk associated with that. The last one I'm going to share with you here is an actual blockchain initiative. We've been working with AIG and one of their partners, which is a D&O or directors and officer client of theirs. They've implemented a minimum viable product around that insurance in blockchain to be able to trace who are the right officers, what are the coverages, and what are the legal requirements. And I think this is a very interesting case study because like many blockchain use cases that I would anticipate, the important thing was to have that partnership because blockchain is an immutable ledger. What this means is you are storing data in there in a way that it cannot be changed without consent of all the parties. So partnership is very important. And being able to define what are those standards, what are we going to share, what do we want to make immutable is important to agree to. And by working in a commercial space, they got around a lot of the issues around data privacy because in insurance, we've been hesitant to put data in the cloud, and yet now putting it into blockchain not only puts it in the cloud, but puts it outside of your full control. And last but not least, around the platforms, I wanted to just give you some insight into what we're doing at IBM and insurance specifically. Last week, we made an announcement with MetLife Insurance, Majesco, the provider of core systems, and ourselves around starting to build out an insurance-specific platform. We're starting with group insurance and cognitive and data and blockchain and mobile, but the intention is to build this out for other lines of business as well. So I think this is a platform that as you're looking forward, you want to kind of keep an eye on and see how it might be useful or platforms like this might be useful to your own business. So I'm going to quickly go through transformation with technology because I'm out of time. Transformation with technology is no different than any other transformation. You need leadership. You need to have a strategy. Strategy is back in vogue, so you know where it is you're trying to go. And you need to apply proper change management capabilities. What is new here is, as was talked about early on, is it's the business and IT working together. We no longer have the business doing their strategy over here and then handing it over to IT and say, how am I going to implement this? You need to do this together. You need to do the development together of the strategy. You need to do the implementation together. And we're seeing organizations build cross-functional teams focused on outcomes using technologies. And then on the other axis, building out centers of competence around new capabilities and building matrix teams to deliver those capabilities in their organizations. So last but not least, I would say learn from others. The information is out there, it's everywhere. At the back of this deck, I have a whole list of resources and links for you to look at, some that are IBM and some that are not. But think about what are others doing? Watch YouTube. Subscribe to the Watson channel. There's very cool things going on out there. And think about, how could I do that? How could I use that? How would that make my organization more valuable? And think about building blocks and how you put it together. And I'm going to end on this slide because I'm very proud of this slide. One of the things that we put together, Ginny Rometty, our CEO, are principles around artificial intelligence and moving forward in the cognitive era. And I think this is particularly relevant to what I've heard over the last few days, like, are your values. These are our values. When you move forward with technology, have purpose. Our purpose is to augment human intelligence. We're not trying to get rid of people's jobs. We realize how important it is to have economic stability. Focus on principle and science. Sometimes when we focus too much on principle, we introduce our own biases and we inadvertently hurt those that we're trying to help. And we focus too much on science and we lose our humanness. So keep those together, even as you're moving forward with technology. And be transparent. Our technology, unlike others, and this is why I'm still with IBM, is transparent. It's not black box. You're able to manage it, you're training it, and you're treating it just like you would another employee. And then invest in the skills to be successful. So I'm about 2 minutes over. I apologize. Thank you for your time and your attention.
Thank you. All right. Thank you, Andrea, for a great start. Outstanding introduction. And I think now we'll pull out your phones because we're going to jump into the audience participation portion of this. We would love to have questions, so feel free to send them our way. But before we get started, we've got a question for you. And the first question is, which of the following technologies is your company using that is having the most impact on your company today? A little hint there. So we've got a number of options: mobile technology, software as a service, the cloud, Internet of Things, platform economy and ecosystems, artificial intelligence, machine learning, robotic process automation, blockchain, virtual reality, or other. And if your answer is none, we were going to have a separate session later for those of you that are at none. So send us your answers and let's see what we think. What's making an impact today?
Where do we see the results?
Interesting. RPA. Very interesting. So I tried to put these choices roughly in order of what I thought was sort of where they were in the evolution, with the most used to probably least used, and I see you have fallen for my trap. We're doing great on things like mobile technology, software as a service. We're not as active in things like blockchain and virtual reality, which I know we talked about yesterday, and at least one of us is experimenting with. And now we have the next question, though. So the next question is, same list of technologies, but when you project forward 5 years from now, which of these do you think will make the most difference, biggest impact on your business 5 years from now? And 5 years in technology, remember, is a very long time. I don't think Snapchat was here 5 years ago. The term insurtech was not a term 2 years ago. So it's just hard telling what it will be, but we're anxious to see what you think.
What's the one without a title?
F is artificial intelligence.
Yay.
Very interesting. Interesting. So so F is the one in the middle without the label, is artificial intelligence. Looks like that one's the most popular, very popular. Internet of Things also very popular. And platform economy ecosystem also lots of votes. So, but I think in general, it's the fact that we're so evenly distributed probably tells us that there's a lot of uncertainty into which of these may have the most impact. So that'll lead us right into our next session, where we're going to start to hear from our resident mutual and cooperative experts. And we're going to do what I'm calling the speed round. So we're going to go quickly through these technologies, and we're going to ask each of our panelists 2 questions. For each of these technologies, tell us, how much impact will this technology have on our industry? And your choices are none, a little, a lot, or massive. The second question is, how long will it be before this technology begins to have that impact? And your choices are never, 3 years or more, less than 3 years, or it's already happening. So, and you can feel free to editorialize as long as you do it very quickly. So we'll start with mobile technology. Kumar, do you want to start us?
Yeah, I think mobile technology is going to stay, and if you look at emerging markets, mobile technology is the way to go forward. In fact, the app that we have developed is primarily looking at mobile technology, but I also think it's blockchain. Blockchain is going to disrupt the market. It's already disrupting in India. We already have insurance companies coming out with flight insurance So it's the other end of insurance. But at Uplift, we are trying to come out with a blockchain solution in 6 months' time.
All right, you've answered 2 questions in one. So mobile technology, massive impact already happening. Job?
Yeah, I have to agree as well. So a massive impact and already happening.
Ken? Anything to add? Mobile technology, it's here, we know it. If you're not on it or building businesses around it, you're probably behind. Software as a service?
Yes, software as a service is going to make a lot of sense, but you have to also realize that there are monopolies coming out in software as a service. And that's a little problematic for us, so, because we have very little choices right now for software as a service, especially.
I think Andrea's quite anxious to create monopolies.
No.
Ken, anything to say on software as a service?
No, I think it's emerging, but I think the but is that I think many of us are still trapped by our core systems.
I think that is very true. I know it's true at Thrivent. Core systems and are handicapping many of us.
I'd like to add something
Yep.
there. I'm in the middle of doing a survey of North American insurance companies around cloud adoption, and there's a huge bifurcation. The business people are moving to software as a service to drive urgency and get things done. And the IT people are trying to figure out how to lift and shift some of these very costly and cumbersome core systems into the cloud to make it more efficient. And right now, they don't have that Venn diagram I showed you. They're not working together. They're working here and here.
That sounds very familiar. Let's move to a couple of the further out ones. How about the Internet of Things? Any thoughts on how much impact and when will it happen? Job?
I think quite a lot of impact, maybe massive as well, and less than 3 years, because we see, especially in the smart home, but also in the health industry for the elderly people, we see a lot of opportunities already, a lot of applications and startups entering these fields.
I think it's huge, but I think it's table stakes.
Table stakes. Ken?
I think it will be more than 3 years, because I think whilst as insurance company we are very keen to measure things, I'm not sure that consumers are as keen to be measured. So I think that behavior will take time to change.
Yes.
So your mother may not be interested in having you know how often she goes to the bathroom every day. Not sure I'm interested either. Platform economy and ecosystems. Anybody? Ken?
I think massive and already here.
Same.
Same.
Yeah, massive, but I doubt the time. You see it already happening, but I don't know what's going to have to break, when there's going to be the breakthrough. So, in less than 3 years.
Less than 3 years. Artificial intelligence, the most popular one that we all think is going to have the most impact. How much impact will it have and when will it happen?
Massive and happening.
Massive, not yet happening.
Yeah, I agree with that as well.
Yeah, same, I think, my markets, yeah.
Massive and not happening at our company yet. Machine learning.
I think it's happening already with us. We are teaching machines how to validate claims.
Yeah.
Interesting.
Yeah, I agree as well. Like, for example, claim process is also customer interaction. We use a lot of machine learning, automated processing. And for now, we mainly use call centers and stuff like that. But in the near future, I don't think we have that anymore.
Ken or Andrea, anything to add?
I think machine learning and cloud are buckets that people are using to describe a lot of things.
We didn't have it on the list, but one of the topics that came up yesterday in our preparation was bots. Could any of you talk about the work that you're doing in your company with bots?
Oh, we're not doing right now anything.
We have the disadvantages. We still talk Dutch in Holland, so we have the disadvantage that Dutch is not the prime language when Watson or other suppliers conquer the world. So Dutch has just recently entered in Watson, for example, 4 months or 5 months ago. So yeah, we try to use those softwares, and we already use it in the claim process, but it's not that fluent as, for example, Lemonade has, which is really natural language processing. It's still a little bit, yeah, the stuff.
I can share that actually we launched a bot about 2 months ago, and the bot was able to sell travel insurance. It works through Facebook Messenger, and the technology behind, of course, is IBM Watson. So what we found, 2 months of experience was very interesting. A lot of interactions, a lot of people want to talk to the bot, but very few actual purchases. So not sure whether this is behavior. Yeah, maybe your grandmother likes to chat to the bot, but doesn't want to buy. Yeah.
Looks for social interaction.
In the United States, Progressive and Geico have both launched bots. Progressive just announced this week that they're on Facebook with a bot, not ours, but with a bot, and Geico has been selling and gotten tremendous uplift in sales around their bot usage.
I know one of the things we have at Thrivent is we have a lot of very older customers who like to call the call center to check their balances. And what they're really doing is just finding someone to talk to, and the bot could really, at least give them someone that could talk anytime.
And really listen well.
And really listen, yeah. How about a term that was a new term to me just very recently, robotic process automation, and maybe, Andrea, you could give us a 1-minute description on what it is, and then we'll have a conversation about it.
Sure. Robotic process automation is being able to take scrapes of information and populate fields in your applications to be able to do things like drive straight through processing. So the example I gave of the Japanese life insurance company is scraping medical reports, providing it into the claims adjusters' screens, and use to determine if it's okay to pay, or to use straight through processing to accelerate that payment.
So, massive impact, little impact, anyone? How long?
Now.
Massive impact and already happening. So Centraal Beheer is one of our labels. It's the biggest direct insurance company in Holland. And what we were just mentioning, it's now still call centers and internet, but we try to straight through processing as much as we can. So we also use image recognition, photos of car accidents, stuff like that.
Already happening. Anyone else? I know at Thrivent, one of the things that we're experimenting with robotic process automation is it's a way to bridge between our legacy systems and a newer API environment. So it's a way to, without reprogramming the entire legacy system, to make that bridge. So I think it's a very exciting, and it will have massive impact, but it's, at least for us, not there yet. I know there are some passionate opinions on this one. Blockchain.
It's already happening. It's massive.
We've staked out a space.
Because we are already testing it, and the interesting thing is that we are doing for a market that is not generally identified with technology. So this is happening for slum dwellers on one part, but it is also, we're designing another platform where we would be using blockchain, where people can create their own mutual health insurance. Because I think we need to be ahead of the technology curve in India, specifically in India, because the insurance penetration is really low and people don't understand insurance. Educated people don't understand insurance. So the idea is that blockchain allows us the speed, you don't have to share all your information upfront, and you can build a mutual insurance system there. So I think we should be coming out in 4 months' time with a platform.
All right, anyone want to take the counter? Blockchain.
I'll do that. I'll take the counter view. I think, if you go to fintech conferences, you play fintech bingo, blockchain always comes out. To be a proper fintech festival, you have to have blockchain, Internet of Things, blah, blah, blah. So I think from what I see, there's a lot of activity around it, but I'm not sure it's actually solving a problem. It looks to me so far, it's a technology solution looking for a problem to fix.
That's nice.
All right, we have two sides on this one.
Yeah.
Andrea, any thoughts?
Yeah, I think I'm somewhere in the middle. I think we're seeing groups of people get together and talk about how they can use blockchain as a common trusted repository of information. I think that the data privacy issues are geographically different, and so maybe in India it's acceptable. I think in Europe and Canada, in the United States, it's going to be tough to really get to the individual consumer level of detail.
Great. All right, last one. and this is the one that I think is maybe the furthest out, but very interesting, is virtual reality.
Not doing anything.
Job?
I expect a lot of impact as well. Maybe last 3 years, 3 to 5 years.
So when we come back to this conference in 2 to 4 years out, you're all going to be wearing the glasses. Right? Or we can just go to the conference from our office. It's a virtual conference.
I can imagine that for our claims department that they have HoloLens and stuff like that for not calling on not going to the scene anymore, but just from out of from a distance from their desk, expecting the claims or the incident.
Fantastic. All right, great. We're done with the speed round. Let's go back to the audience, and we do have a couple of questions, and I am going to get to them, so it's a good time to transition. We're going to talk about process and how, and the first question that we'd like the audience to answer is, how much time do you personally spend on innovation and/or emerging technology? So when you think about all the time that you spend during the week, how much time do you personally spend on innovation or emerging technology? And your choices are A, more than 40%, B, 20 to 40%, C, 10 to 20%, D, less than 10%, or E, none. I don't pay any attention to this whatsoever. You can attend the second session later. Interesting. So by Mike's test that we're all technologists, we are all apparently very part-time technologists. So more than 60% of us spending less than 20% of our time on technology. I would at least personally concur with Mike that I think it's a challenging time not to spend significant time on technology. So the second question, again, similar to the last batch, how much time do you think you should spend on technology or innovation and emerging technology? And the same choices as before. So we were at about 70%, less than 20%. And we'll see how much time we think we should be spending.
This is the guilt question.
Quite a bit more.
Yeah, but still.
This was, we did a similar exercise with the Thriving Executive Team several months ago, and this was exactly the same reaction, was that our executives were collectively spending less than 10 or 15% of their time and thought they should be collectively spending about 2 days a week, so closer to 40%. So great, very interesting. So we all have plenty of work to do. Let's hear a little bit more from our panelists. What are your reactions to the survey, and what do you think it will take for our industry to dramatically increase our ability to innovate?
Well,
Ken, sure.
Maybe I'll start. I think maybe my perspective is that actually as an industry, we're actually not built for innovation. Our industry is about being around for a long time. I think my organization is 45 years old, and I think as an insurance company, that's pretty young. I think there are a lot of insurance companies out there that are 100 years old, right? That's the norm. And insurance companies are built around stability, and therefore innovation kind of goes against that. But I think what's happening is that now we are now in this changing world where things are beginning to happen. There's a lot of technology out there, and then we talk about disruption. So how do we move from an organization that is built for stability to one that is going to be more agile? And I think that's the big challenge facing us as an industry.
I think that's right. Anybody else, comments, thoughts?
I think when it comes to markets in India, and especially the markets that Uplift is working in, technology is something that if we do not, because let's be honest, this government, the current government is talking about digital India. They are trying to digitize as much possible. Our cashless transactions have gone through the roof. We have now Aadhaar authentication stack where you can use government data to really check who is who and what is what kind of stuff. And what we are looking at is that if you really want to penetrate a market like India, because the bottom of the pyramid is the biggest, these kind of technologies are going to help you reach to that client, service the client, and talk to the client. Otherwise, it's really enormous. In the micro insurance thing, a lot of people don't come inside because it's very cost heavy. And these technologies, yes, there is an upfront investment in them, but only when you do this kind of upfront investment that can you go down, and that's where the market is of the future.
It's a great comment. So we've gotten a number of questions, and I want to follow up on what Ken said, because I think it's a really interesting point he makes about innovation versus stability. And one of the questions we got, and I'm going to combine two questions, was, as a co-op or mutual, is it more or less important to stay up to date with the latest technology trends? And are we at risk of looking to technology to babysit our members the same way many companies used outsourced call centers in the 90s and 00s? And might that cost us in terms of our relationships?
Wow, that's interesting.
If I may answer or drop my thoughts on this one, is I think what I'm missing in why we don't innovate, at least in Holland, is that we miss a disruptor or an intruder in the insurance industry. There's no company that takes all of the sudden 20 or 30% of the market share. So we try to stretch ourselves and creating actually new business models which are also out of the field of insurance. And therefore maybe making absolutely the mother organization or the mothership. And especially with we also have direct client contact now. We are a trusted party for them as well. But if you have technologies like Internet of Things or have Alexa or Google Home, I'm very anxious to know how in the near future the client will communicate with us. Is it only Alexa, insure my car for today, or does he ask also, please insure that with Achmea? And I'm really, because our brand is now very high, it's one of the most famous brands in Holland, but I'm very curious how it's going to happen in 5 years. If we still have a top position in brand recognition, or it's only Alexa or Google Home that determines what kind of insurance product is, which companies used.
Great. Kumar?
I think babysitting is a strong word because I'll tell you my problem with the place that I work is that I need to reach out to a family that does have a mobile phone, does have internet, but does not know what insurance is. I'm not talking about they know, they do not know what insurance is. And yesterday, for the last 2 days, everybody is talking about preventive care, insurance as a service, all those things. I really do not know how to deliver this physically. It's massive costs. And the app that we are building with our Finnish partners in India, Tieto, is primarily aimed at providing services. It's aimed at preventive care. It's aimed at people seamlessly being able to buy policies on the mobile and file a claim on the mobile, order medicines on the mobile, because see, nobody makes apps for them. This is not a segment which is kept in mind when you're building an app, and that to an insurance app. So for us, technology is going to be a differentiator because we are talking about a market that is underpenetrated, not just by insurance, but also by technology, though we have mobile phones and internet.
I'd like to add something. I agree with you, Kumar. I think it's about access to the masses, to information that maybe they don't have today, as well as protection and coverage, and access in ways for those that do have access today in ways that are maybe more comfortable. And I don't think human beings are going to go away out of the equation because we still are an empathy-based business. But I do think that having the access to be able to research and understand and get smarter is really important.
Just to add, I forgot saying this because yesterday, for the last 2 days, again, trust has come up as a big factor. How do you create trust in a market where people have to earn daily? Well, we are in competition with Card MBA. Card MBA does it in 1 day. 60 claims a day for 4 million people. We have recently just done it without using blockchain yet. In 24 hours, we are also settling health insurance claims on reimbursement basis with hospitals that don't give us automated bills in 24 hours. Using mobile and blockchain, we will be doing it 0.02 seconds. So for me, it's not technology to show off. It's basically at the back end. The customer will only see, the day we did it in 24 hours, we got a call from the customer saying, I actually have money in my account. Because these people have been cheated rampantly by financial products. You should know that there are a lot of Ponzi schemes in India. People are really afraid now to put their money in. And once they see that money is coming so fast, the kind of trust we are able to generate, for me, technology is an imperative to build trust. It is not to just bring efficiency. It's to build trust. And if it is not doing that, it's better to go back to legacy systems because we can't play around with trust. That's very important.
I think it's a great point, Kumar. And I think one of the challenges and one of the opportunities, though, that we've seen, and I know from looking at some of your websites, is how do we use technology as a way to augment the deep personal connections that we have and maybe even increase the number of touches that we get to have. Andrea, you mentioned in your speech that when it comes to innovation with technology, it's important to think big but start small. Could any of you share experiments that you've done or how you've gotten to your new bot or your new app? What's been the process and how have you thought about starting small and thinking big?
I'm happy to share. So I think one of the things that we realized when we start working with some fintech companies is that they have a very different approach to the whole idea of business. For us, going back to the idea that we built for stability, every time we do something, we launch a new product, we have an initiative, is that we need this long cycle of planning, right? We need to build a case, we need to justify a case, we have a budget. And then when we do that, as an organization, nobody likes to fail. You can't fail. But in this startup community, there's a lot of things going on, a lot of experimentation, and a lot of so-called failures. But of course, they don't see it as failures. They see it as then they can try and start something else. So I think realizing that difference, what we started in an organization, we started this whole idea of something called proof of concept, which is actually, if you like, it's a bit like a sandbox. It's permission to fail. So this, when we started this chatbot, is also as a POC. Basically, we're not going out there to say, if you invest in this chatbot, how much business revenue would it generate? That's our normal approach. Now what we're saying is that we don't know because there's a lot of uncertainty. We don't know what consumer will want. Let's experiment. Let's try it. We try it as a POC. We see what comes, and then we go from there. So we have started this whole concept of POCs to try different things. And I think that's going back to the earlier discussion around innovation. I think that's a shift that we need to make from the way we have always operated on stability to agility and how to allow the organization to try new things and permission to fail.
Anything to add? Yeah?
Yeah, we actually use a two-way approach. So in one way are the more process and product innovations, and therefore we use the agile philosophy. But agile, but still we have to have the planning process and we have to get the resources. And for the more innovations which are more strategic and outside of the insurance field, we try to set up our own startups which are located outside of the company in a different city or in a different building. And therefore, there we also try to, as quick as possible, create an MVP version, test it with clients, and if it doesn't work, we stop it and we try something new.
Bill, thank you for the question. I think you gave me some time to speak more in detail. We have built this app it's an app like it is everywhere, but what has gone inside building this app is 6 months of value proposition. What are we going to offer? Are we just going to build an app for the app's sake so that we can do some transactions and show some places? Or we are actually trying to answer certain questions which have been raised in the last 2 days. First is trust. Second is mutuality. Third is insurance. Fourth, insurance as a service. Fifth, prevention. I think what we are trying to do, and it sometimes overwhelms me that we are trying to do so much with one app, but we don't have many resources. We are a company that is 14 years old. Out of 14 years, the last year has been where we are planning to scale, and thanks to 555, we have resources coming from cooperators and LF who are actually behind us so that we can focus on things like these to scale this up. And what we are trying to see is that how do you make mutuality come out? How do you make sure that certain data is transparent, certain data is private? Because I think community data has to be transparent. You need to know what your mutual is doing. You need to see where your money is going. But on the individual side, you have access only to your data and nobody sees that data. So what we have done is, you look at this app, I'm not sure it's clear, but it gives you, when you open the app, the first idea of how many members are there in your community, how many claim applications have been filed, how much money has been disbursed, how many people have attended outpatient services, how many people have attended health screenings, how many people have called on the 24/7 helpline. See, the idea is sheerly to create trust. I may not get a claim, I may not file for a claim, but I see that things are happening to other people. We are in fact trying to devise a system where we will show each member of ours, that their contribution helped pay a particular claim. So that's on the first side. The second half is about the personal data. It's about the product details and what they have been able to access. They can call the helpline from here. They can file a claim from here. And these are people who can do certain things, but not necessarily very efficiently. So picking up this application is going to be a task for us. We are going to teach our people how exactly this can be done. You can order medicines from this app. You can know which hospital is the network hospital nearer to you. You can talk to us. You can file a complaint. And the most important thing that is going to come in a month's time is the voting access. What we are giving our members is a voting access, because we are really scared that once we scale up, we will go away from our members. So we are bringing voting to the quality of services we are offering, to the quality of claims that is happening, and as well as governance. So if we have to ask a question of governance, we do not need to organize a meeting. We can do it through this, and we are preparing our staff and our current members to start using it. It's a big challenge for us. The uptake is a big challenge. We are trying to, this will be launched in the first week of December this year. And the idea is that we come out with a version every 6 months. So the idea is that blockchain will be enabled on this in 6 months' time, where we are trying to see if we can do this claims payment from 24 hours to 0.20 seconds, 0.2 seconds. Sorry, and if it doesn't work, we'll check out blockchain. So it's as clear as that, because we are not here as, we are not technology company, though we have set up a technology company just to do this. And we are working with Tieto to develop this kind of platform. So what we are trying to do, in effect, is make sure that we are ready to face competition. As you know, we are all discussing, are we ready for tomorrow? So my tomorrow is pretty, we have too many numbers to cross. So, and I can't do that alone. I need people like ICMIF members to help me out there, but I also need technology to do this. And this is something that I can openly say that within the 555, Card MBA, Uplift, PIC Kenya, we are the guys who are actually experimenting with technology at the mass scale. And if we work together, I think there is a two-way, interaction that can happen as to what we are doing and what could be done. Because microinsurance in India may be poor, but microinsurance in European markets may be a mobile cover for students. things like that. So I think there is a two-way process that can happen.
It's an amazing app, and I think we should all be inspired by the transparency, which I think Andrea mentioned, and how important it is, especially in a mutual. And if you haven't seen the video of Lemonade describing their business model, it's worth watching, because that's a for-profit company that has rethought their whole business model to create trust from the outset. And if anyone should create trust, it should be us. So I think we could all learn from these examples. So thank you. We did have a couple of other questions, and one of them, several that are getting at a similar point. So I'll just, I'll read one. Are we at risk of losing the human element of businesses and relationships, and how do we strike a balance here? Physical and social relationships are fundamental to our mental health and well-being. We can't afford to sacrifice this element completely. And then the second question that gets at it maybe a little more precisely is, if consumers deploy personal avatars using AI, is there a time we get to the point where there are no humans in these transactions? Which I think is a thing also that many people are worried about as an employer, is, if you're a claims handler or you're an underwriter and you hear about artificial intelligence and cognitive computing, the first thing you think is, I'm not going to have a job.
Can I start?
So how do we respond to that? What's the role of humans in the future?
So I think the role of humans will never go away. I think we're further away from AI taking over the universe than we all understand. I am old enough that I've been through a lot of technology transformations. I did some of the first ERP implementations, and I used to be a CFO, and everybody was saying, oh my gosh, all the people are going to go away because these systems are going to do everything. Well, guess what? Finance departments are really big, because now with these ERP systems, we have all this information and we do a lot more analysis. So the work changed, but it's not gone. With digital, people said the same thing. All the stores are going to go away. Well, but look, Amazon now is buying grocery stores. Banks with the ATM said banks will go away. Well, guess what? Human beings like to give money to other human beings. That's going to be a big obstacle to electronic payments in a lot of countries. So are people going to go away? No. Are jobs going to change? Yes. Will there be a difficult transition? Possibly. Think about travel agents, right? When mobile technologies came up and all of the kayaks and all of those companies came up, everybody said travel agents are dead. But guess what? People now have access to all that information, just like we have a ton of apps on our phones, and we get overwhelmed. And we need someone to curate experiences across those apps for us. So there will always be a role for human beings to keep that human touch, but the technologies help us be more efficient and understand each other better in terms of having those interactions, is my belief.
Very nice. Anybody else want to comment, maybe more specifics from your company? Ken?
Well, I think if you look at it from the industry point of view, I think currently our structure is very highly built on intermediaries, right? And and almost all intermediaries today are human beings. So I think I don't disagree with Andrea, but I think it's a question of starting point, right? So if all interactions today are human beings, at some point this might shift because of consumer preferences. The ease of transaction with AI, for example, chatbots, etc. And I think some of this could be replaced. But I think the whole question then is, how does this play out? Because the risk is disintermediation, and our industry is actually built on intermediaries. So there could be a shift towards that because of where we are as a starting point. Yeah.
What I just already said, Bill, is that central beers are a direct label, and we have to challenge that. You have to get rid of a lot of personnel, because direct interaction goes primarily through the mobile phone and chatbots and stuff like that. So you see it more increasing. So, and then I can imagine. On the other hand, we need other people as well for. In the Scrum teams, for example, and developing apps and developing new services. But you see a difference between the capabilities of the personnel we we have to get off and the personnel we actually needed. So yeah, there you see it slowly changing more to a technology company sometimes than we are an insurance company.
I think it is scary if you look at these things coming in, when you think of these things in the long term, it feels, you do get scared. But what we are doing and what mutuals and cooperatives can do is to reimagine how to empower your staff to reach out more using technology. And that's what we are planning. We are not executing it right now, but we are planning is that today my field team reaches roughly about 2,000 people. Can she reach to up to 5,000 people using certain things? And I think technology can provide the skill to the unskilled. I'm not talking about coders, I'm talking about enabling systems that help my field staff reach out to much more geographical area than she can today. So I think if we are able to see, you have to always understand that you are the person behind technology. Technology, as in, it has always been there. Technology was there when fireworks created. Now you can light a house, or you can use it to keep yourself warm. So I think technology is always going to be a disruptor. But if you're behind it and you have created a policy, a vision in your company where you see technology as an enabler right from the bottom to the top, I don't think it's that scary a situation. It can enable our unskilled staff to become more skilled.
I think that's how we see it at our company too, is can we automate complex repetitive tasks and free people up to do personal interaction, empathy,
Yes.
relationship building, those kinds of things. So I think that's a great point. Well, we're coming up on time, so maybe to close things out, we'll end the way we ended yesterday with the inevitable question of, when you think about new technologies, you think about changes in the workplace, you think about insurtech competitors, maybe even internal issues with your legacy systems or whatever it may be. What is it that keeps you up at night when you think about the future in technology? And I'll leave it to whoever would like to start. Job?
Yeah, I don't know if it is really technology driven, but the thing that we are worried most about, for example, in Holland, we are the biggest car insurance company, and we see development more and more companies like Tesla integrate our total proposition. It's not only the car, but it's also the insurance, also the maintenance. You see this, for example, with BMW as well. They say they make an agreement with Allianz, the German insurance company, and they make a deal. All the BMWs are insured all around the world. So if that's going to happen more and more, not only with cars, but with houses, for example, as well, with company buildings, then it's going to be difficult for us as a quite local insurance company to still insure our clients. So that's the most worrying for us at the moment.
Great one. Ken?
I don't think it's about technology. It's about what technology could do, and then ultimately how technology impacts interaction with customers, and then potentially changing the business model. I think as an industry, our business model hasn't really changed for longest time, but I think now there is enough technology out there, and the confluence of all those different technologies to potentially change how we could do business. And I think that's what keeps me awake at night, thinking about how potentially that could change going forward with all the new technologies, younger consumers, changing preferences, etc.
I think I spend my time at night because that's the only time I get to read. So I keep reading what's happening, and next day I run after my staff, do this, apply this, test this out. So I'm pushing my staff to apply technologies as much as possible because we want to remain very low cost. We want to remain very effective. Somebody yesterday was talking about effective implementation. As a mutual, it's our moral responsibility to be also very effective in implementation. So I think what we are doing at Uplift is primarily spending a lot of time over our work hours to make sure that we can reduce all turnaround times, we can deliver on our promises, And that's what we are spending our time on. Reading, we are reading massively. We are looking at, we are talking to different companies who are actually doing something. There is this company that is coming out with an automated plant that gives you clean drinking water for 4 rupees, 20 liters. And in the market, you have to buy 1 liter for 10 rupees. So they are doing it through technology, and we are talking to them, can we put such systems in our place, where we can enhance the value to our customers. So the idea is that we see technology as an enabler, and we can control it, provided we have a tab on it.
Andrea, any parting words of wisdom?
For me, it's all about the ethics of how we use the technology and the information that we have. I spend a lot of time on TED Talks and other places thinking about the ethics of big data and how we use this for good.
Great. We had one interesting, you mentioned data, and I think we had one question about data, and since that's our next topic, I'll leave that for the next panel. So if you could join me in thanking our panel, appreciate it.
As the chair, I get one last question quickly, bring it back to the economics, because this was by the way, a fabulous conversation and kicked off the day in good form. But just for the 4 gentlemen with the companies, Andre, not to leave you out, but this is a specific question. Your technology budget year over year will go up by what percentage this year? Ballpark.
Low single digits.
Low single digit increase?
For us.
25%.
25% increase year over year for your technology budget. Yep.
I think as well lower single digits.
Low single digits.
Yes.
Yeah.
High single digit.
High single digits. Okay. All right. So it's going up. It's not one of these budget areas that's going down. And it's going to get more important is the takeaway. I would just, I'd add before we break here for a half an hour, the sophistication in this conversation was really quite remarkable. I picked up a few things. This is all moving. I think 2017 will remember as the time where somebody on one of these panels said, no, blockchain's already here, we're working on it. Which was I think a remarkable statement. That 41% of you saying that the AI side of things is going to be more important in the future is a really significant conclusion from the audience. I think also this issue of mutuality and how do you marry technology and trust to further our position as being a unique provider of these services to our policyholders was a very interesting insight that I think there's probably opportunity to do more with that. And then finally, we'll come back to this question throughout the day of just how much can be automated. There's the seeds of an interesting debate and what will humans do in this industry. So again, one more round of applause for a great conversation.